Hello everyone, my name is Dan, and in this video I will show you how to stop trading order blocks the wrong way, and instead I will teach you how to identify high probability order blocks using smart money concepts. So if that sounds interesting, let's get right into it. Alright, so before we get into the good stuff, before we get into the high probability order blocks, let's quickly discuss about what a order block actually is. So a order block forms when big institutions place big orders in the markets that push the price either higher or lower. That's a really quick definition of what a order block is in case you didn't already knew it. Okay, so now let me tell you, in my opinion, not all order blocks are created equal. Okay, and this is where the high probability order blocks, the A plus order blocks, come in, and these are exactly the order blocks I trade. Okay, because let me tell you something. There's people that would consider, okay, I'm just gonna pick out random candlesticks. Okay, they would consider this as a order block because from here we can see that price pushed higher and broke structure. Okay, then they can also consider this as a order block. Okay, because again, after this bearish candle, price broke higher pretty impulsively. Again, they can consider this a order block as well. Okay, because if we look to the right, price then broke higher. Okay, but in my opinion, these order blocks, all these order blocks that I just drawn here, aren't valid for me. Okay, these aren't A plus order blocks in my opinion. Okay, so now what would be the steps that we could follow to be able to spot these high probability order blocks? So these are the rules, and let's start off with step number 1. The order block has to be unmitigated, and after it forms, it has to create inefficiency or imbalance. Okay, rule number 2. After the OB forms, the order block, that's the OB, I want to see a aggressive break of structure either to the up or downside. That's rule number 2. And of course, after we go through all the rules, I will show you an example that respects all these criteria that I actually took yesterday. A trade that I actually took yesterday that respects every single rule. Okay, rule number 3. We want to see liquidity being swept before the order block forms. Rule number 4, the order block has to align with the overall trend. You can check the higher time frame, or you can just zoom out on the time frame that you are trading on. Okay. Rule number 5, OB needs to form either during London or New York session. If a order block forms during Asian session, I personally won't trade it. Rule number 6, I only trade order blocks during high volatile sessions, again, like the London or the New York session. And lastly, number 7, trade order blocks only in trending markets and try to avoid ranging markets. All right, so now let's quickly get into the example that I actually took yesterday, but for that I will use the bar replay. Okay, so it was around here. Yeah, this is exactly when I saw this A plus order block, this high probability order block. Okay, and step by step we will go through the rules and I will show you exactly why this one respects all the criteria. So let's quickly scroll and see what was the rule number 1. So the first rule has to be is this one, that it has to be unmitigated, and after it forms, it has to create inefficiency or imbalance. And rule number 2, after the OB forms, I want to see a aggressive break of structure. Okay, so this is exactly where I opened the chart, and I saw this order block right here. Okay, this one right here. So rule number 1, we have to see imbalance or inefficiency form after this order block was created. Do we have that? Yes, we do, because if we zoom in, we can see that the high of this candle doesn't overlap with the low of the third candle. So the inefficiency is clear as day. Okay, we can very easily spot it. Now, the second rule was that we need to see a break of structure, an aggressive break of structure after the order block forms. And yes, we have that. we have a break of structure right here, and we can also note it like this, BOS, break of structure. All right, now let's get into the third rule to see if this order block respects the third rule as well. We want to see liquidity being swept before the OB forms. Okay, so let's see if liquidity was swept. And it was, because check this out, we had a low here, and price went lower than this low right here and swept liquidity. Okay, right here. So we also have a liquidity sweep before this order block was formed. All right, now let's get into the fourth step. The fourth step was this one. The order block has to align with the overall trend. Okay, so to do that, like I said, we can just zoom out and we can see that definitely it aligns with the overall trend. We can even draw a trend line if we want to. Okay, so it definitely aligns with the overall trend. Okay, so this was step number 4, I think, if I'm not mistaken. Step number 5, the order block needs to form either during London or New York session. And in this case, the order block formed at around 10 a.m., 11 a.m. UK time. So that was during the London session. Okay, so this rule is also respected. And the 6th rule, I only trade OBs during high volatile sessions, London or New York session. And this was exactly during the London and New York overlap. Okay, so within the trading sessions. And lastly, we have to trade order blocks only in trending markets. And as we can see, once again, we can zoom out. We are definitely in a trending market and not in a ranging market. Okay, so it is safe to say that this order block is a A+ order block. It is a high probability OB that I would personally trade. Okay, why? Because it respects all of these rules. Okay, it respects all of them. But of course, that being said, don't think that if you have an order block that respects all these 7 rules, it will be a 100% winner, because that is not the case. Okay, you will still get losses because losses are still part of the game, but they do have a bigger win rate. Yes, it's going to take you more time to identify them because of all the rules that have to be met, but trust me, the win rate will be bigger than, let's say, you would pretty much trade every single order block, no matter if it was unmitigated, no matter if it was during the New York or London session, no matter if it broke structure aggressively, and so on and so forth. Okay, so for me, in order to trade a order block, it has to meet all these 7 rules that we just discussed about. Okay, so after this, I was like, okay, this trade meets all the parameters. Now I can pretty much place a buy limit right on it, stop loss below, and the targets accordingly. I usually aim for 1 to 3. Okay, and also this was a trade that was sent in my SMC trading group. I will attach a picture on the screen right now to see exactly when the trade was sent. This exact trade on USDCHF. Okay, and of course, feel free to join it. Feel free to join my SMC trading group. It is the first link down below. Okay, so now everything is in place. We just saw that this order block respected all of our rules, and now we placed the buy limit. Okay, so all the work was done. Now all we have to do is wait and see if this order block plays out and how it will play out. Okay, so let's play the market and see what happens. Okay, so this is exactly when our buy limit got triggered, and as we can see, we have an instant sniper reaction on this order block, which is very beautiful. Okay, the first target was already smashed here. Okay, so we can play the price. Now the second target was smashed as well, and now we are approaching the third target, which is at 1 to 3 risk to reward, and we can play the price, and boom, the target was smashed right there in around 3 hours. Yeah, in around 3 hours, this triggered exactly during New York session, right before the stock exchange opened. It tapped us in, and then it went straight up, and we barely had any drawdown. Okay, so it was a beautiful trade based on this 8 plus order block, based on this high probability OB. Okay, and of course I will attach a picture on the screen right now to see exactly when I updated the trade in the SMC group that the trade smashed all targets. And yeah, that was pretty much it. This is exactly why I decided to take this buy limit trade on USD because this order block that I placed the buy limit on respected all these rules. Okay, rule number 1, 2, 3, 4, 5, 6, and 7. Okay, so these are the rules I always keep in mind when I look for order blocks. And I only trade high probability order blocks. If let's say I find an order block that respects all the rules besides, let's say, the sixth one, I won't take it. If it's not during London or New York, I won't take it. It is that simple. I'm being very strict, very straightforward, and I'm keeping it very simple. And that's it. That's really it. That's how you can trade high probability order blocks, and that's how you can improve your win rate. Okay? So if you like this content, make sure to let me know down below, and make sure you are subscribed to not miss out on future uploads like this. Feel free to also share and like the video. That would be very much appreciated. And as always, please let me know down below if there's any questions, any unclarities, any feedbacks, any video ideas. I will make sure to check them all out. Until next time, a very cool ICT trading strategy will pop on the screen right now. The Silver Bullet strategy, a strategy that could help you quit your job in 90 days. So if you're interested, go ahead and check it out and let me know what you think of it. I cannot wait. Until next time, I'm wishing you all the best and take care.